Hi, Warriors. How's everyone doing today? Hi, Tommy. Yes, and you're on deck. You're up in 30 minutes. Tommy Thornton's with us today, everybody. If you don't know about his work, you're going to learn about it, and it's really good stuff. Anyway, Thursday, kind of a setup, book squaring type of day. I think everyone's going to be mainly waiting for tomorrow. Seems like we're always waiting for tomorrow. AJ, Ingmar, Bran, how are you? Steve, okay, Tom, you're good. James, Kman, how are you? Okay, thanks, Kman. Ryan, Scott Henderson's coming here lately. How are you, Ingmar? Jolts, layoff still low. Okay, you should enter our contest. Doing okay. Blake, Adam, how are you? Okay, so let's try and figure out what we're going to not do or do in front of tomorrow's big number. Seems like it comes down to these inflection points quite a bit, right? You could watch us on X and you can watch us on YouTube, or you could come in and be attendees and ask questions,
So the
comments.
real, so the real question today, Dale, and good morning,
Good
is
morning, buddy.
we have ADP data in about 15 minutes, less than 15 minutes. Then we have weekly
Yeah.
unemployment claims in 30 minutes. Then we have the ISM services data a little bit later. And is the culmination of this data going to take away some from the non-farm payroll data?
Yeah, good
Because
point.
the Fed's focus on employment. It's obvious.
Right.
We all know it. They know it. So is today's data going to be equally as important, if not more important, than the actual headline tomorrow? I don't think it will be, but I still think the market is going to react aggressively based on the data that we get literally 13 minutes from now. So I'm going to be setting
Okay.
that. And I know you want to. Ryan's been gone for like a month and a half, so I'm sure you want to talk to him after him being out for. Ryan, did you hear me?
No, I'm on holiday.
And I'm sure you want to talk to him and Kman
He's
before we
like
get into
me.
this.
Yeah, Ryan's like Magellan. He's traveling the world by boat. Ryan, good to hear your voice. How are you?
Yeah, I'm all good, mate. Good to hear you too.
Yeah, good to be back. So you've been watching things while you're away. Your initial impressions coming back and seeing the board. What do you think?
Everything's pretty much where I left it, give or take.
That's for
Um,
true,
yeah,
especially in currencies. Yeah,
yeah.
yeah.
So yeah, lot of ranging going on. I think though, we are on the cusp of seeing some big breakouts happening.
Which
You
way?
know,
Dollar down, dollar up. It's in this rectangle here.
yeah,
And yeah, so indecision, if we take out this high, it's going to look pretty good. It should take out this larger trend line. But if it takes out this low, we're going to at least, 97-ish and maybe new lows.
yeah.
So,
It's all on the data. We're all on the data right now. We've got the NFP, which is obviously huge after last month's and all
yeah,
those revisions. So it's going to be huge. The next CPI is going to be huge. I've been saying it, on the flow show, and I've been saying it on the trade off with Michael. This is going to set up the rest of the year and going into 2026. Okay, this is going to be whether the market thinks, yeah, we're just going to get a September cut and then that's it, or we're going to get a cut twice, three times, and into 2026. The traders, investors, big investors, they're all going to be gearing up for the last 4 months of the year, 3 months of the year, and setting their stalls out in 2026. So I think this is going to be big, and we're
okay.
going to range
You know,
breaks.
Face can save you a lot of money. So I know we talk about that you have to dig into your wallet for maybe a pip a day. to hang out with us, or less if you do full size stuff. So a lot less if you do full size stuff. And yesterday Blake was talking about don't get crazy bearish about the bonds and and the notes. And it was TLT was down here.
It
And
just
look
took
at this.
off, man.
That
Woo.
was a great. I mean, that was. You know what, Blake, and people really don't have an appreciation for it. But the bad trades that you don't take, that you were considering, and then you don't take it, and it would have been a loss, mean just as much as any trade that you know that you're in.
Yeah.
It doesn't show up on the P&L. So if people don't know how greatly it affects your P&L if you avoid making the mistake. Sometimes that's as good or better than making a profit. So a lot of value in what you put out here yesterday. That was a huge move and great instincts, good-looking technicals. Uh, you
Thank you,
really do
sir.
a good. You do a good job for people to come in and listen to you. So we're looking at Ryan. Just to get back to you, you have any vibe on U.S. dollar yen? They took out some stops earlier this week. They took out these highs,
Yeah.
but pretty little. Not much follow through. Is this just still a correction from the big week we had with the, you know,
Yeah.
yeah.
But
And are we going to head down again? Because yields are. I mean, look at what yields are
I was
doing.
just about to say, look at those 10 years you were on.
Yeah,
We're breaking
yeah,
that
they're
420 mark.
yeah,
When we're at 420, middle of August, beginning of August, I
yeah.
said, watch if we get to that 430, 435, because it's middle of the range
Right.
between there and 450, the wider range.
It was
And
also a head and shoulders top
yeah,
that it came back and checked the neckline a couple of times. And the objective, that's why didn't get bullish, because this objective is
yeah,
410, 410. So, I mean, we're not far away from it, but
could be could
what
be
are you
four
looking for?
could be
For
4% by
yeah,
the end of the week, depending on what the NFP show.
yeah,
But talking about dollar yen, you'll notice that we've got a divergence again, that dollar yen isn't moving with yields, which that's a bit of a tell right now. Probably we're just looking at the NFP and the market's just it's doing its own thing with these various pairs, reassigning risk and maybe taking a bit off the table, or the market's been in summer mode and now it wants to see what happens before it starts putting money to work again. But we've got a disconnect at the moment between those 10-year yields and dollar yen, so we need to keep an eye
yeah,
on that.
yeah.
And yeah, this if we hold this break of 420, and NFP confirms that it should break because the market's getting more expectation for rate cuts, then potentially the dollar's heading much, much lower, and dollar yen might join it as well.
Okay. I just want to mention platinum, because Stell brought it up yesterday. And, when you look at platinum and palladium, and someone's been asking about palladium, it was a great move, but I think we could get a C wave down, A, B, C. So if you want to buy this white metal, you could get it might be able to get it at 1200, because look how far away from the breakout we are anyway. But, you know, gold's coming off, Kman got out. Not perfectly, but close. Um, so, how does it feel to not have any? Well, you probably still have your silver position on, Kay, right? Good morning.
Morning, Dale. Morning, everybody. But yesterday I was talking about, days on end, talking about that 41 and a half. So yesterday we went really close on silver, and I took
41, yeah.
a fair bit off, and I was pretty lucky to hit basically the top. So to me, that's an important level up there. It is also on the a top trend line. I've got a lot of stuff going on up at that 41 and a half, 41.60 in silver. So just playing it a bit safe for now and waiting what the data are going to tell us. Yeah, gold. We had that little $50 come off overnight when China came up with some comments on their stock markets, trying to stop speculation a little bit. And then a few things came off in sympathy, which was gold,
Yeah.
obviously Chinese stocks, and then also the Aussie got a bit of a slap around the ears from the highs. But yeah, gold is still a hedge against everything that can go wrong, and there's a lot of things that still can go wrong in this world. So yeah, it's going to be interesting if we really get weak job reports, something going absolutely pear-shaped on that potential Supreme Court ruling for Trump tariffs. Gold could trade for 4,000 before we know it. But yeah, for the time being, let's keep feet on the ground and see what's going to happen on those numbers.
This is tempting to me. If the NFP wasn't due up tomorrow, I would try and short this. I mean, it looks like, just a little bounce.
Yeah.
Yeah. Anyway,
I would say you can always put like a stop entry lower, but the thing is, the problem in the markets that we have seen of late and really the last months, even years, is that there's mostly several waves, or a lot of the times coming, and so you can get put in a position, but if your stop is too close, you're going to get stopped out before actually the second or third wave starts to really go your direction. So I'm not particularly using them right now. I used to use them a lot, but over the past months, year, I haven't really used a lot of stop entries.
okay. I just want your guys' comments. Since the tariff was announced, they've taken the copper market kind of away from us. It doesn't even feel like a real market anymore. Anyone have a comment on it? I mean, copper was always a good trading market my whole career, and that death blow, now it looks like an EKG of someone in a coma. Uh, what
Yeah.
do you think about? I mean, you guys have been around, and Ryan, you've been on the floor. When you see something like this, is this a broken market now, and can it
And wait,
heal?
just before you guys answer, just
Oh
remember we
yeah.
got 3 minutes till data.
All
So
right.
I'm going to take over
Take
in
over.
about, well,
Take.
no,
Go
well,
ahead.
Ryan can go ahead and answer that question. I
All
will
right.
still take over, but go
Okay.
ahead, Ryan.
Yeah, I mean, you could look at this one. It's only been doing that the last month or so. It's been pretty volatile before that.
Right.
So again, could it just be a bit of a summer lull that we've seen in that market? Because as well as I do, Dale, it's not afraid to bust a move whenever there's a headline or something going on in that market.
Yeah. 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 Strange.
I mean,
Strange.
the US copper market. It's been extremely wild over those tariffs. If you look at
LME.
the LME has been much more stable, and that is still quite big, I think.
That's a good point.
It's
So my,
closer to
my question, Dale, is what happens if this court case goes against Trump's tariffs? What happens to copper then?
Does it go back up?
I would say it goes straight down.
Yeah.
I
Wow.
would say this happens. If you start seeing the reciprocal tariffs, they're
Going away.
full, and yeah, I mean, the copper is going to take a shit. I mean, that would be
Okay.
my initial
Won't
gut
be the only thing.
reaction. Yeah.
Okay.
So
All
guys,
right.
we got just a couple of minutes. First of all, I want to just say, Ryan, welcome back. It's good to have you back. As much as I like to harass you all the time, it's always great having you here. And I was actually just paid to say that, so I really didn't mean it. So if you click over here on calendar, this gives you the data flash on Forex Analytix. Obviously, you can follow along via your Live Squawk feed too. We're going to pull up 3 different charts here. We have the dollar index to the left, and Dale pointed out, yeah, we're in a triangle, or I think we're actually in a triangle. He said we're in a rectangle. I actually think we're more in a little bit of a triangle in the dollar index. But yeah, we're really consolidating here. Whether we see the upper or lower end of this range, if you will, has probably more to do with what happens over the next 24 hours than the data that we get. But there's
10 seconds.
Okay, here's your dollar index, and then we have S&Ps right in the middle or on the right, and yields on the left. So
54,
ADP weaker,
54.
weaker, weaker. Now that data came out quicker here than you're going to get it anywhere else. It could probably match Bloomberg, and you can see that that weaker data has ushered in some dollar weakness. I actually closed all of my dollar longs last night in Asia, so I'm completely dollar agnostic at the moment. And I don't know if I'd want to chase the dollar lower. In other words, buy the euro unless we start to see weekly unemployment claims weaken here in about 15 minutes. But that's entirely possible. I mean, we could see them go up. That means that we're getting weaker unemployment. If that data comes in weak, and then you get the ISM data that comes in weaker as well, that is a recipe to put the euro right back at 117.20. And this is the triangle I should have referenced, Dale. This is more of
That's
what I
nice.
yeah, and so you
Beautiful.
can see this teal right here is the 117.40 level.
Yeah.
Support is really 116.10. You have to get above or below these levels, in my opinion, to really get the market to move. I think this is going to be,
I just want
Yeah.
to point something out quickly, Blake, with that number. Okay,
yeah,
we've missed by, depending on your expectations, 14 to 19,000. Okay, it's different when you're missing 14,000 on a 200k number than when you're on a double-digit number.
sure.
So the 14k isn't that big a miss in the old context. It's a big miss when you're talking this context, and this is what you're going to be looking at for the NFP as well.
Right. And you're exactly right, Ryan. So we're, for the NFP, most of the market's looking for about 70 to 80,000. So, the thought process, and if you guys are sitting there doing the NFP guesses, by the way, if you haven't put in your guess for the NFP giveaway, Ryan, could you put
In the
that link
chat.
in the chat box, please?
It's already there. Okay, put it in there.
Okay, maybe put it in there again. If you're out there thinking that we're going to create 150,000 jobs, or we're going to lose 100,000 jobs, I think you're well off the mark. I think the moves that you're going to see is probably within about 30,000 of analyst expectations. We might get below 50,000, we might get above 100,000, but that's going to be pushing the envelope. So Ryan, why do you feel that way as well?
Which way, sorry?
Why do you feel that the context that we're going to see in the jobs report shouldn't be too exaggerated from where we're currently, what analysts are expecting, which tomorrow they're expecting, based on our calendar, about 74,000. So why?
Because we're pretty much sitting on the break-even level. Okay, a lot of Fed members are saying it's between 40 and 75, or 30 and 80,000, or whatever. So these smaller variations can mean a bigger difference in that thinking. If we get a 30k NFP, the market will go, oh, whoa, panic. But then it's still within that break-even range. So it's still not the jobs market falling off a bed or falling out of bed.
Yeah.
And really, the US economy can be sustained on 30, 50, 70,000 jobs, because every month it's another gain. That's what you got to remember as well. Until we get a string of negative numbers that show there is a big problem in the jobs market, even 20k a month is still positive employment numbers.
And especially given the fact that our immigration has been basically shut off for all intents and purposes.
Exactly. And the other thing is the market will be worried about the trend. We're not seeing 200, 150s anymore. We're now in the double digits. So is that trend going to lead to turning negative? It's possible. But as I say, if we go through 20, 30, 40k plus numbers for the next 3-4 months, the jobs market is still pretty healthy, just not as healthy as it has been in the last couple of years.
Sure. Now, and Forex Trader asked, well, what about the revisions? Yeah, we're obviously September 9th, which is, I believe, next Tuesday. Kman, do you know what time that is that they're gonna put those out? I mean, have they said?
I'm not sure, but it could be right at the same times, you know, like around 8:30 a.m. Eastern time or so, or 9.
Yeah,
Should be in the morning somewhere.
so next Tuesday
Yeah.
we're gonna get those revisions, but you have to trade on the data that we have. Look, you can't you could, and believe me, people do, and it's been not to their benefit. You could say, "Oh, well, I'm not trading the Chinese data because no one believes it." Well, I don't give a shit if you don't believe it. Who The market's going to it's going to trade what it gets. It
Yeah.
doesn't matter if you believe it or not. The market is going to react. So if you choose not to play the game that's in front of you, then go play checkers with yourself. You know what I mean? You have to trade the data that we are given because
I
that
always
is what the
win.
market is trading.
Yeah.
I always win, like when I play myself.
Yeah, I mean, go play solitaire, Dale. You win every fucking time.
No,
Anyway,
it's a valid point, but you also need to use the data against how the market moves on it. You know, if the
sure.
market gets too extreme or too extremely dovish over the data, that's when you can look to maybe fight it because you say, "Oh, the market's predicting 8 consecutive cuts because we got a 40k NFP." You know that's too much. You know that's too much, and then potentially there's a trade there. So yeah, you can only trade what's put in front of us, as you say, Blake, but then use that against what the market is pricing.
And
Well,
don't
then
think
if the Fed doesn't cut, I'd say that would be a surprise in September.
Absolutely,
yeah,
massive,
100%. And that's Powell. That would be Powell and the Fed giving Trump the middle finger,
yeah,
that's going to make this September 17th meeting. Is that what it is? Do I have the number
yeah.
right?
But
Yeah, September
I,
17th meeting, really important.
what they do in September, I think, is largely irrelevant because the market's what we're pricing 90%,
Yeah.
95%, or whatever it is that they're going to cut. It's not that they don't cut; it's how many more cuts are going to come. Are they going to follow up with 2 more cuts for the rest of the year? Are they going to? Because this is a forecast meeting. Are they going to show dots that show 4 cuts next year, 5 cuts next year? That's what we're going to be trading, not what they do at this meeting in terms of cutting by 25.
And so going back to Forex traders' comments, don't focus so much on what you think. Focus on what the market is giving you and also how expectations shift. Because the expectations, how they shift is how we make money.
Yeah, bang on.
Period. End of story.
You're pretty
Okay.
tough. You're pretty tough today, man.
Sorry. It just, people think they're, try to outsmart, the thinking here. Don't. You have to react. You have
Yeah.
to. And
Yeah.
we're in a regime right now and in a market right now where we have to take in all the variables and try to make sense of it all.
Yeah, and
But to
the
choose
market
not to react to data that we are getting as an input is a mistake.
and the broader market isn't trading what that ADP was now. It's trading what it means for the next 3 to 6 months.
Yep. All right. With that being said, I want to ask. I'll just point this out right now. For me, I can trade in either direction at this point in time. You give me some strong data. You give me some strong data today with ISM, especially like the services data. You get a strong jobs report tomorrow. I have no problems being on the short side of the euro. The flip side of that is if the data shows decisively some weakness over the course of the next 24 hours from right now, this very moment in time, the data that we receive, I have no problem playing this euro past 117.50 and targeting 119. So that's where my focus is right now. And I think the technicals are very, very easy to read. And you just have to be able to be patient, which most people lack. That's where most people fail.
The waiting's the hardest part, Tom Petty.
100%. So now I want to ask Ryan. Ryan, what are you looking at? Because I'm really laser focused on the euro right now. What are you focused on?
Yeah, I'm in a euro as well, but more euro sterling.
Well,
The
I'm
US
long euro sterling too, but I'm talking about
Oh,
like dollar pairs. Where's your focus going to be based on the data that we're going to get over the next 24 hours, though?
I'm not in either camp right now as far as the dollar's
Okay.
concerned. I think that the balance of risks is to the downside. Because the way the data has been turning out, as I said, the trend has been coming down in jobs, and the market's leaning that way. So any miss, the market is going to want to hit it. So I think that the path of least resistance is down for the dollar. And I even think if you get a good number tomorrow, it's probably a rally that's going to get hit. So I'll probably look at that side.
Okay. All right. Kman, where's your focus going to be over the next 24
Um,
hours? We get all this dollar digestion that's coming in.
yeah, just been listening to you guys for the past 10 minutes. I sold everything, my house, my car, everything, and I bought dollars and closed my.
Not Bitcoin. You should have bought
Good.
I mean,
Hey,
really, I
you
mean,
probably made some pretty good money there.
you guys convinced me that the next move in the dollar is going to be at least 20% higher.
All right.
Nah, on today, I'm actually not overly focused. I'm going to be focusing on the ISM and the employment factor in there. Interestingly, on the ADP, there was no red numbers in the small, mid-sized, large companies. Just posted that in our chat room. What is my focus? That's a very good question, mate. Actually, I'm really don't have too many positions running right now. I think it's if the ISM shows a good number, I have the impression that dollar yen may be the one that goes a little faster topside than other dollars. But really, I'm going to just probably snipe a few things if I see some. But then again, NFP tomorrow. I have to watch the unemployment rate. Yeah, it's going to be reactionary. The one, and again, I don't have the position right now, but I really think if something really bad happens, gold is probably going to continue to rally. But then the other side is true as well. We could see a bit of a correction there on slightly better numbers. The problem, I think, with the market now is likely not going to be one to run too long dollars for as long as it doesn't know what's going to happen with the Supreme Court and the tariffs as well. And there's so many moving parts right now. It's
There
it's
are.
really it's really hard to go gangbusters in a position. And I think sniping or how retail traders call it scalping, I call it jobbing. That's still the word of the day for as long as we are in those ranges. Because you look at nearly any currency pair, not talking about metals, etc., but look at nearly any currency pair, it is in ranges. Even the cable, after the excursion a bit lower down on the back of the gilt market, is correcting because the gilt market is also calming down. So yeah,
I'll give you a short answer, Blake. NVIDIA is the most
oh,
important chart on the board.
Well, you know
are you
what? I want to.
Dale? Are you trading currencies on the back of Nvidia?
I
Just a
trade
question.
everything.
Okay.
Yeah. Well,
But
what do you mean by
they,
that? On the back of
yeah, I mean,
NVIDIA?
they answered. I would answer
Yeah, but
Dale's
that's
question.
the thing. I
No.
mean, Nvidia, I'd love to actually trade it and trade equities on the back of it, no problem at all. But do you trade currencies as well on the back of it? I'm just a question.
Oh,
If there's a correlation.
I'm not sure. Oh, well, yeah, I think, as NVIDIA goes, the market will go.
Okay.
So, yeah,
Mhm.
if NVIDIA is breaking down, left a little gap,
Yeah.
we start taking out this 168 level. There's a picture. That's euro, but NVIDIA looks like it's do or die here.
So
Mhm.
the correlation would be if
Risk.
Nvidia breaks down, the S&P breaks down, then the
Yeah.
question is, what does the dollar do? And we don't know. I mean, shit, we haven't seen any type of substantial risk aversion for so long that I'm not sure what the dollar is going to do and what's the context of why the market is selling off. Because let's talk about this, because Ryan, was it Ryan? No, Kman, you just brought up a really good point. Let's say, oh shit, you guys didn't tell me the news is coming out. Damn it.
5:30.
Sorry. Now I have to go back. What are we
Looks like it's
did we just
strong.
get? Unemployment claims, what'd they come out as? Sorry, I'm not looking right now.
Not there yet.
Okay.
237. So okay.
Yeah, not bad.
whatever.
I mean, the dollar's firming up as a result. You see the dollar's going to tick higher right
Continuing
now.
claims down a little bit, 19k or 14k, depending on what you're looking at.
It's
So
not bad
move
data,
along.
guys. It's not bad data. And you can see that the dollar's, coming right back up towards its highs. But Kman, you bring up a really good point here. If the Supreme Court, comes out and really, finds that the tariffs are illegal, what a freaking mess that's going to be if the U.S. has to repay like a lot of these collected tariffs. And I mean, some of you might think that's outlandish, but it's not necessarily outlandish. And if you think about that and you're like, well, what would the dollar do as a result of that? And you go back to like Liberation Day, as the dollar weakened, would that cause the dollar to strengthen as a result? And I don't know if that.
I don't either.
I think
don't know.
the thing is, well, there's two things to know about it. So first of all, they are going to rule on that. Let's call it Article 232, right, which is the security thing. But as Michael Brown also posted this morning, there's other ways of still keeping or re-inputting those tariffs in there's different laws possible. That's one thing. But the first reaction, I think, is going to be one where the market says like, crap, they are not going to get all those tariffs. Think again about the big beautiful bill that's going to cost a heap of money, and the dollar will get sold. I think the dollar will really get a
Also,
quite strong hit on the head.
You talk about a bill. There's one more thing, but I want to let you know Tommy Thornton's here.
Oh, okay.
That the Democrats could shut down the government if they don't cooperate with the Republicans.
Do they have enough?
They need Democrats to keep the government open.
Oh, really?
So this is their last lever of power for a while. And no one wants to be blamed for shutting down the government, but if they say, well, they have reasons because of how the money is being spent or not spent, we could have an issue. Everyone always poo-poos government shutdowns, but we've had them before and had them last weeks. So we'll see. That's another thing you could throw into the mix. But what I, like about Tommy Thornton is he's another guy that could marry fundamentals and technicals. And before I bring him on, I want to thank the team. Full strength today with Ryan here. People are saying this was a fascinating F.A.C.E session that we had, some of our attendees. So good job and good mentoring, Blake. Good mentoring and yeah.
Thank you.
And Blake, go ahead.
I was just going to say, if you guys aren't having these conversations with traders 24 hours a day around the clock, you need to be in the Forex Analytix chat room. I'm showing you just the conversations that we have all day long and about the trades that we put in, having the news, access to news and links and research reports that you want. It's all included with Forex Analytix. So make sure you come take advantage of the summer sale that we're about ready to nix in the butt. Is it nix in the bud or nix in the butt? Buttocks or bud? What do you say, Ryan? Is it nip it in the buttocks?
Bud.
Ass.
Nip it in the ass.
All right,
all right, Dale.
Blanca, you're going to detention for half an hour today.
All right,
people are saying you're
I
you
feel a
you
little
know
freaking
them.
aggressive today.
You are. I'm
Come at
telling you.
me. Come at
Uh,
me. I've been up since 3:30.
all right.
All right. Love you guys.
Hey, all
Thanks,
right.
team.
All right. Hey, Dream Team, thanks very much. And Tom Thornton, welcome back to Face. It's great to
Right.
have you back.
Should I go on video or do you just
No,
go
that's
audio?
fine.
Would be cool.
No, we could just go audio. Maybe you could do a screen share of some of the things you want to talk about. I brought up NVIDIA, and Tommy, I got your blast, your stuff, and I love it. It's really good stuff.
Fantastic.
You play
Well, I
both sides
appreciate
of the
that.
market. We've certainly had enough of the Mark 13s and everything for one of them to work eventually, don't you think?
Yeah. Can you see one of my screens? I'm trying to
Yeah,
figure out which
I
one.
I have them multiple charts, multiple quotes.
This
Um,
one.
I have NVIDIA PE 41
Okay.
times on the
So
right hand
if we're
side.
gonna talk NVIDIA, I mean I can kind of go there.
Okay.
This this is kind of a unique chart that I've used for a bit. It's looking at the NVIDIA price to earnings ratio, and I do this with a bunch of others. And I use to mark indicators, and the key numbers are the green nines, pink 13s, which are the combos, and the red sequential 13s. And these are inflection point type exhaustion signals on the
Yeah.
upside and downside.
Yes.
And this just goes back down to, April.
Yeah.
And truth be told, I hadn't been a buyer of Nvidia for a while, and I ended up buying it under $100, and I sold it up here around 145, and then it carried on a bit more. But when you get these 13s, generally speaking, what happens is you tend to get a pause. You're exhausting buyers, so you're running out of buyers on the upside, and it doesn't necessarily mean you're going to have a 1987 type reversal the next day, which a lot of people have this thought that that has to happen. But no, it can just
For a day.
pause things. So for
Yeah.
example, down here, you ran out of sellers down here, and it wasn't that the smart buyers came in because you had a bit of a wiggle, but right
Yeah.
here you got up to 42 times earnings about, and you had a combo and sequential. I am short Nvidia currently, and
What's the green where it's at right now? I see some green
oh,
numbers.
it's this down here it's on the countdown or on the count the setup count on day four of
Okay.
of 9. So it's been moving down, and I think that's just kind of where I'm watching right now. I think it could get to under 35 times earnings. And one of the things that's important here is that this has been moving higher here, and that's multiple expansion. And you can look at, a Microsoft that moved also higher with huge multiple expansion. And that to me was unsustainable. And I'm also short Microsoft, so that's topping as
Okay.
well. But this is kind of boring. I
Maybe
mean,
you'll have
one thing, go
yeah, go
on.
ahead. That you may have a chance to buy it where you got out.
Yeah, I mean,
145 NVIDIA.
I think that right now my view on the markets is that it's a pretty boring time right now. As much as all the news and everything happening, uh, I just was listening to the currency talk, and everything seems to be in a fairly tight range. And I'm gonna
Yes.
pull up this is silver right now. So if we're going to talk real quick,
All
silver, I
right.
think is going to peak here. Yesterday with a sell set up 9. I think it's a little overdone. I'm going to talk a little about market sentiment in a second too. But if we're going to just look at the DXY, let's look at the dollar.
Yeah, dollar's really been sideways for
Yeah,
a
and
month.
that's okay. Okay, so give me a sec because I have 5 charts that pull up at the same time, and it takes a second. So if we're going to crunch it down here, one of the cool things with the mark indicators that I really like, that not as many people talk about, but I do on my notes a lot, is resistance lines and support lines. And
Levels.
yeah, these are levels to watch. That we just had a sell countdown 13 on the DXY yesterday, and I've said ignore that for now because this resistance line at 99.42 is really important. It got above it briefly and then fell right back down, and it's held this down on the support 96.85. So I think these lines are going to be really important, and how these are calculated completed setup here takes the true low of that count. And then this one here is the true high of this last nine here. And so you have these resistance levels. So to be quite
Yeah.
honest, it's really,
Coin
really
toss.
boring right now in currency land.
Volatility spreads.
Yeah, I mean, I think right now you really just until something breaks either way, you really don't have much to do. I know that's like everybody wants to be doing everything,
Yes,
but
you have to be creative when you do a podcast or run a webinar when the
yeah,
markets
oh,
are calm.
absolutely.
You search for things, but there's always something to trade. I'm curious. I started a campaign trade in nat gas last week, looking at this as possibly being a significant low. You have
Yep.
anything happening there in nat
I do,
gas
but
to?
I'm just going to show you one more thing here. This
Oh,
is
okay,
correlation with NVIDIA and SPY, and it's been
okay,
very tightly
yeah.
correlated. And this is daily, and I'm going to show you the weekly real quick, and it's even more so. But it's starting to
Oh, wow.
diverge a little bit. So that's the
Yeah,
weekly over the last few years with NVIDIA. And so when everybody says follow NVIDIA, well, you have to because it's I think 11% of the index.
right.
And even Bitcoin is starting to diverge, but I'm not going to get into that. I,
Okay.
I'm honestly,
Your comments have been saying that there's not a lot of fuel left in this market. That's the way you feel, and that the breath isn't that great as well.
well,
Those are the
the
things
breath
that are bothering you, or
breath hasn't been great. Recently, yesterday was really, pretty awful breath, but you had Google and
yeah,
Apple up and Tesla up a little, and those by themselves really lifted the major indices. Yesterday also you had the equal weight stuff is starting to show some signs of weakness as well versus the S&P and Nasdaq 100. Natural gas. I am long natural gas. I'm with you. It's been a struggle, and oftentimes you get like very short-lived reactions with some of these 13s, but when you get a bunch of them, and sometimes when you see on my charts two pink 13s, it's just two versions, and this one is a more strict version. So it's starting to turn. That's a positive. It's above the 20-day. 50-day is going to be resistance here, 332. So
yeah,
I'm long natural gas here. One other thing that we've talked about and I think is really pretty cool is our market sentiment. And let me just pull this. So on our site, you can get daily market sentiment, the daily sentiment index from Jake Bernstein, all the different
DSI,
markets.
yeah,
And I'll start with natural gas because I think this one really got beat up pretty hard, and it's starting to turn. So sorry that little box there, but this is the sentiment here. It got down to where was it? 17 percent bulls, and it's starting to turn. I like using a 20-day moving average for the index as well as market sentiment, and when it starts to turn up you have a better shot at it working. So that's a positive there. Oh, gold. Let's talk gold because everybody's talking gold. I think there's a lot of touristy gold people right now, and I'm going to
yeah,
pull this back to a 2 year. So you're at 88% bulls. It
yeah,
came off this 40 level, which as you see was pretty much resistance down here. God, what is that little box? So it's back to overbought levels on that, and it can, one thing about sentiment that a lot of people don't get. and they look at the AA, II, all that, and they think, oh, just because it's overbought or oversold means it's a trigger. It's not. It's a condition. So I think that's really important to kind of watch. So we're
That's a
we're we're
pearl.
overbought here. Go on.
That's a pearl.
Yeah.
Say that again. Sentiment is not
Sentiment
a
is
trigger.
no, it's not a
It,
trigger, it's a
it's a
condition.
condition. I like that. Thank you,
Although
Dr. Thornton.
although I will say at times you can shoot take a shot when market sentiment gets to a certain level. Like for example, on gold, if it gets under 10% and it got down to 8%, back in 9/28/23, it wasn't hard to be a buyer at these
Yeah.
levels. So when it gets above 90, 90 on the upside, or below 10%, it seems to work pretty well. Going back, and I can go through the S&P real quick. Hang on.
Okay.
We're
And
redoing our entire web.
I'd also like your view on, yields have been pretty wild lately,
Yeah,
right? We
yeah.
came in Monday with a huge gap lower opening in bonds because of what started in the UK, and we closed that gap, and the 10-year taking out support at
Mhm.
420. Uh, Wondering what your read is on that when you have a chance.
Let me run through the S&P real quick. First of all, it's been kind of holding in this level here. I look at 50% as a majority level. So if it's above 50%, it's you have more bulls than bears, and that's okay. If it's below, you have more bears, and that can be a concern. It's been holding in here, but it peaked on 7/3/25. So this was the peak here at
Yeah.
87%. It's been making lower highs. It's really got to break the 50% level, and then we could see a deeper correction, which I am positioned for. I'm net short, and as much as it may seem painful, I'm up 20% this year. I've hedged myself a little early on things, but that's just me. Happy to be positioned the way I am because I think with seasonality and such, it's gonna be tough. This is interesting here, and I'm glad you brought this up, Dale, because this is kind of bizarre to me. Okay, so this is the 30-year tr yield. So we're just nearly at this 5% breakout level again, and I'm going to show you this and go back 2 years, and we can adjust things to different periods as well on our sentiment stuff, which is cool. Market sentiment is pretty high here. It's at 50 or 61% bulls. Okay, that's relatively high. And that's really kind of strange to me because we are at the cusp of breaking into above 5%, and sentiment is still really, really elevated. So I think I think you have a lot of people that are just holdouts thinking that rates are going to go lower with the Fed. And my view on the Fed is that there's too much analytics done with the Fed. I think the Fed will cut 25 basis points. They're more focused on the labor markets. What typically happens is when unemployment starts to rise, it's at 4.1 or 2 right now. They're expecting 4.3. When it starts to rise, it's not a one quarter type thing or a Fed cut's going to do much. It rises for quite a while. So I think that if we have a revolt and the bond market sells off and we move clearly above 5% on the long end, we're in for some real problems here. That's, I
Yeah.
think, one of the biggest risks here. So
Yeah,
sentiment remains.
the market won't be able to ignore that, will it?
No, I don't think so. And it's not going to necessarily help the situation with it's not going to help the
Deficits.
situation with housing. It's
Yeah.
not going to
Yeah.
help the
Yeah.
small caps, in my opinion. Even if the steepener happens, I think that I think it's a risky bet. Maybe
We
there's,
have a
you know,
we have a sovereign bond crisis globally.
yeah,
I mean,
it's
people
possible.
love junk. I mean, the charts between junk and treasuries, junk looks better. People feel more confident about getting repaid
Well,
with that credit
one
instead
of
of
the problems is, in my view, is that people are yield whores in this world, and they'll take
yeah,
unbelievable amounts of risk in this market to make money. And that you can look at the. Let's talk about positioning. The CTAs are all in.
oh yeah, I saw
Retail's
that.
been
Yeah,
buyers of the last 18 weeks in a row. You've just had just
everyone's
too
in the
much.
pool.
Yeah, everybody's in. I think you have, um, the problem that I see is that something out of the blue could happen. And maybe it's the tariff news. Maybe it's the CPI comes in real hot next week. And it's all very possible. I just think that people um, are overconfident, overextended. There's leverage in the system. The vol control strategies of option selling is the assets are huge. The levered ETFs out there, single stock ETFs, which I happen to know Matthew Tuttle pretty well, and he's a good guy. And everybody is like, oh, I can't believe these levered garbage ETFs, and basically he's just giving the people what they want and what they ask for, and people
Yeah,
can buy or sell all those things all day and night. My view is that it's just a sign of the times of over speculation, and that typically gets punished down the road. And I've thought to myself, especially after Powell's press conference in Jackson Hole, that we're more likely for a significant correction at this point. And, after that speech, I think the markets have been kind of selling off here. So I
right.
think if
Yeah,
we break a few levels, the buy the dip people will be out of bullets. And the CTAs, again, they're fully loaded on the upside, 100 percentile long. That to me is just, another, cause for
yeah,
concern.
and it's not a trigger, but it's an extreme condition.
Yeah, I'm not necessarily, a perma bear or perma
No,
bull. I mean, in April,
I like that
I,
you're
I
I like that you're a schizophrenic with bipolar tendencies, Tommy.
yeah,
Yeah, you could go both ways.
my wife will tell you that you absolutely nailed that one. But I'm opportunistic, and I don't see a lot of good risk reward on the upside. I'm not necessarily one that chases after significant moves higher. I'm skeptical in the sense that it takes a lot for me to really get interested in buying something. Partly because it's just I have a strategy where I look for low market sentiment. I look for DeMark signals on the downside that all line up, and we're sort of on the other side of that right now. And
Yeah.
momentum also has been, if you look at momentum, and I'll just pull up the S&P
You
real
know,
quick.
one out of favor group that came back to life, I started talking about it about 3, 4 months ago, were the cannabis stocks. They've all
Yeah,
had
I
huge
have no
runs.
appetite for that stuff. I
Well, maybe
honestly,
that's why you don't have an appetite, is that you
yeah,
need.
I
Anyway,
I honestly just don't have the fundamental knowledge of how those companies are run,
me
and
either.
I just don't I just they don't appeal to me at all.
Anyway, it was a, huge base, quadruples. Anyway, that's something that,
So
people
one of the
lost.
things that one of the things we can talk about, and this is kind of important. Uh, DeMarc signals, they signal exhaustion, and they they you've got 13 here, 13's here, 13 here, 13 here, 13 here, and everybody's like, oh, well, they don't work.
Right.
Well, one of the things that happens is when you have, well, I guess you could say they worked here on for the buy signals, but what happens is they you run out of buyers up here and you run out of buyers here, and they can go sideways for a period,
Yeah,
sideways, and
yeah,
it's basically saying that you're just running out of buyers. And when you have the persistence with the green setups, and setups happen, and these counts have to happen um, each day, you have to have a close higher than the bar 4 bars back. And if that doesn't happen, the setup disappears. The green doesn't happen. But you've had 1, 2, 3, 4, 5, and that is really pretty rare for those to happen in so many periods like that. And when you have a 9 that happens, then you can have the red counts and the purple counts, and those are the more significant trending type of indicators. And so right now, you have you on the S&P, you do have pending 10s on the combo and sequential. So you may still have a little bit left here, but if you break this, remember we went back
yeah,
early, the TST.
yeah,
If you break this level 62.99 here,
yeah.
all bets
That's
are
it.
off.
Yeah.
That will cancel those. That's one of the cancellation things. But
Yeah,
here's this
I
is
was
the
saying that the one thing we know after what happened on Monday, on Tuesday, is that low is key. And how about the Nasdaq putting in a lower high while the S&P was putting in a higher high?
yeah,
That
I'm
hadn't
pulling up
happened for a
NDX
while.
right now. So this you have 13s here, and again, when you see a couple of the purples, it's not that there's more, it's just there's several versions that I use, and Tom DeMark uses several versions as well. But these stalled things out for a bit, and you just didn't get the movement down. One thing that's been pretty interesting is the 20-day moving average, this green line, has been pretty steady, holding things in check. It went 1 or 2 days below. I think you had like this period where it was above that for, like an unprecedented amount of time. But you broke below it. This is like August 1st, where you had that big dip. But you
Yeah,
held this TDST line, this setup trend line here, as we've talked about. That was important because it was there and you could see it. And if you broke below, then you probably had more downside.
yeah,
But you've held that level. And, if as much as some people may be frustrated that you're not getting the extreme signals that you kind of want, which I may be in that camp that I'd like to see a little bit more volatility. These are the lines here. So on the NDX, 22,667,
yeah,
669 is the
yeah,
level. I think if you break that, I think that's going to be pretty important. But this is a momentum indicator here, Bloomberg momentum indicator. And when it's green, obviously, you've got a lot of momentum, then it's real positive. But it's been starting to waver here. And the RSI, I use a 9-day RSI. Um, and some people, that's, a little shorter term, but it hasn't been looking great. So I'm looking at that saying momentum's a bit suspect here in the indices. But, again, if you want to look at breadth, let me see if I can pull my breadth from yesterday here. Hold on.
okay. I also, Tommy, want you
Yeah,
to, after
here you go.
this, pull up your website so people could see where they could get a hold of you.
Oh, okay. Hold on a sec. Uh, yeah, here we go. Like, and this is yesterday. It's, wasn't that great. It came back a little at the end of the day, but my site, um, I will tell everybody, do not sign up to my site. I know that sounds awful, but it really is. Oops, that's my account. This is our site. We're redoing it, a completely new site. We have a lot of stuff with market sentiment. We have a trade ideas portfolio that we look at. These are our notes that we put out, a bit, you know, cheeky at times on things. But don't sign up to my site now. We're coming up with a new site. I mean, if you want to, I'll give you guys a discount. Just reach out to me at info@hedge fund telemetry, and I'll give anyone a discount because it kind of blows right now. Uh,
Okay. All right, buddy.
no, everybody says their stuff is so great, but right now, we're going through a major transformation, completely new look. Everything's
Okay.
new. But the bottom line is on my portfolio, we still are doing, a lot of different trades. I'm actually a
Yeah.
little bit quiet right now with trades. Uh,
Well, you're reflecting
but
the indecision. Yeah.
we're up
Okay.
20%, double the market right now.
That's nice.
So yeah, I mean, I got a lot of shorts in here, some that aren't doing so well,
Do
but
you handle any money? Do you manage any money
I
besides your
do.
own? Oh, okay.
I have a small fund. I have some special managed accounts for some people. Yeah, I have
Okay.
money. Money is moving. Yes.
Okay. Are you a CTA or an
No, I'm not.
RIA? Okay, just a
Nope.
private guy. Private guy.
I am a private hedge
Yeah.
fund manager.
Yeah. Okay. Well, Tommy, a lot of
It's not the, 5 billion that I used to, when my old firm that we ran, but it's enough to keep me busy and keep me entertained.
give you a pulse, right? Tommy is
In this market, yes.
chock full of information, and you know what I learned? That just because you have the DeMark stuff, that even with that, you have to go through a learning curve to be subjective. You still need your discretion as after a while of watching this, which indicators would be better triggers than others. And
Yeah, that's true.
that's
And
important.
the important thing, I've used the DeMark indicators for 25 years,
Yeah,
and I know when they work real well. I know the different time
yeah.
frames that I like to look at. I blend in some fundamentals into things, and I think that it's important for people to understand that. One thing, while I got you here, I know this is going to be, you're going to be like, okay. I just want to do two things: unemployment report, and the CPI. And if you want to look at the mark indicators when they work pretty cool, this is really it. So if anybody is still hanging in there, I think this is going to be worth it for you. Here, let me move that guy. Okay, hold on, hold on. Give it a sec. And you're gonna be like, oh, this is interesting because we use DeMark indicators on a lot of different things, including the unemployment report. And if you just look at the 13s up here, this goes back to this is the 80s. 13s up here, unemployment was very high. It was low in the 78, I guess relatively in the fives. But the 13s here, here, here. I mean, we can go
Turning
through and
points.
throw out COVID because that was nothing.
Yeah,
But we're lifting higher after making a low here with these 13s. One of the things that happens sometimes is you get two cycles in here. And I've looked at it and it's still above the 5.5 level. And it was 5.5 on the second one up here as well. So when you do have it down towards the threes, you
yeah,
generally have a move that's fairly substantial. This was the 2006, it bottomed in 2007 around it bottom. And this is a
yeah,
monthly chart and it lasted a while.
yeah.
This is 2000, 930, 2000, and it lasted till '03. So
Wow.
that, if when people are thinking you have unemployment and the Fed's going to come in and, save the day, it lasts for years. That's what
Yeah.
people don't get.
Yeah,
Um,
it takes time for the transmission of it.
and
I
and
mean, people will act in financial markets on it immediately, but economically, it takes a while for the transmission.
but that's the thing that people don't realize is that once unemployment starts going, you're kind of in a mess of a bind. Hold on, let me get here. This is CPI. Okay, this is the monthly CPI report,
Okay.
and I'm gonna go back. I'm gonna go back 100 years. Actually, I'm gonna do this in a better chart. This is fine. Time is of the essence. and we can look back 100 years of the CPI and look at the DeMark indicator. So like people will say, well, how did it work out in 2017? Well, you were pretty much toppy up here. You bottomed here, 13s, 13s. These just show up at important inflection points. A 9 here. These are just important. So we can go look at the 80s, 70s. Look, if this is 74 and we start to see or inflation start to rise again, because we had the first rise. Second, what if we have like this pattern
Yeah.
it keeps moving up?
Yeah.
Now remember this
That
13
brought in
here.
Volcker. Yeah.
Yeah, and now look,
It looks the same.
yeah, you had 13s down here. You had it
It's a
up here. I
pullback.
remember a Twitter person was saying, "Oh, it was like a month early before the peak. I guess the DeMark indicators don't work for economic data." Well, it seems to be pretty good right here, but
Yeah.
it's these new buy 13, so you're starting to move up. So if this
Yeah.
starts to move up again, and I think it could go to 4, maybe 5% and I look at tariffs as a tax, so that's
Okay.
an issue. Anyway, Dale, that's it. I'm just gonna,
All
sign
right.
off here.
I mean, that was great, Tommy. Really, I
Sure,
want to thank you for
it's always a
sharing,
pleasure.
sharing your stuff. And, as you can tell, Tommy is passionate about what he does. And you know what else I like? He takes time off every once in a while to smell the roses. So even great traders have to step away once in a while. Tommy Thornton, my trading warrior
When
brother, I'm so glad our paths
Thanks.
crossed.
Can you refresh me when I'm taking time off? I'm never taking time off.
Well, you
I'm
went,
addicted to this.
well, you
I
went to
need
visit
time off.
relatives and, you're
I know.
taking time. I mean, long weekends, okay? Long weekends. But
I try to turn off the machines on Saturday. I do work on Sundays to go through
yeah,
the week
right.
ahead type notes that I put out. I think that's
Yeah.
important. So
Uh,
that is that. I appreciate it. Thanks to all
love
your
your
people.
work.
If anybody wants to reach out, hit me up at info@hedgefundtelemetry.com. Talk
People
to you
are
guys.
thanking you, Tommy, and I do
Oh,
once
thanks.
more. Thank you, buddy.
Cool. All
All
right.
right. All right, bud. So, Tommy
All right.
Thornton, follow him on X at Tommy Thornton, and you'll be
Yeah,
able to find all that
yeah,
too.
yeah. I love
Okay.
X. It's the
All
new
right.
one.
All
All
right,
right. See you
buddy.
guys.
All right. See you, Tommy. So, everyone, I'm glad you enjoyed it. That's recorded if you want to watch it again. That was chock full of pearls. I really like that expression that sentiment is not a trigger, it's a condition. I'm going to steal that from Tommy. All right. But, after thinking about stealing, don't forget, don't just count your pips, count your blessings. You're welcome, everyone. See you tomorrow for NFP. Adios.